So to best apply this relationship between those three financial statement equations, let's look at an actual example. So we have Information Corporation here. Note that they've got the following balances at the end of their, I want you to read this carefully, first year of operations. And what did we say that we know is true for the first year of operations? Remember, beginning retained earnings is equal to 0. So make a note there, BRE, beginning retained earnings, is equal to 0. That's what that first line tells us. We also have total revenue, total dividends, total assets, total liabilities, and total contributed capital. So the question is, what did this company information report for the ending retained earnings balance, and what were their total expenses at the end of this year? To be able to solve this, we just need to look at those three equations and the way that they work together. So starting with the income equation, let's get that one down first. So net income is equal to revenues minus expenses. Net income is equal to, I'm not loving my N, net income is equal to revenues minus expenses. Retained earnings, the ending retained earnings balance, remember, is equal to beginning retained earnings, and you need to be able to come up with these equations on your own, plus net income minus dividends. And then finally, I need my balance sheet equation. Remember, with the balance sheet equation, assets are equal to liabilities plus stockholders' equity. And stockholders' equity, we remember, has two pieces. And those two pieces are contributed capital and retained earnings. So now we've got our three equations. And again, you need to have these memorized and be able to create these on your own, blank sheet of paper, be able to write all three of these down. When we look at these, we remember that there are links between these key financial statements. So for example, net income goes from the income statement down to the statement of retained earnings. In addition, retained earnings is a component of stockholders' equity. So we need retained earnings in order to finish out the stockholders' equity section. Now we want to start putting in what we know to see if we can solve for the two things they asked us for, which were retained earnings, all right, and total expenses. So before we start, remember what we knew to be true about beginning retained earnings? That is 0. Beginning retained earnings is 0 because it's the end of their first year of operations. In addition, we know that revenue is $510 million. Okay, I know that dividends is the next piece of information I'm given is $20 million. I have got total assets there of $750 million. I've got total liabilities next at $350 million. Now look what's happening. I've got assets of $750, I've got liabilities of $350. Well, I know assets are equal to liabilities plus equity. So at this point, if assets are $750, liabilities are $350, equity must be $400 million. And if equity is $400 million, and keep reading in the information that we've got there, contributed capital is $210. Okay, stockholders' equity has two pieces, contributed capital and retained earnings. If the total of those two pieces is 400, and we know one of those pieces is 210, then the other piece, retained earnings, has to be 190. And again, that was one of the pieces we were looking for. So ending retained earnings is 190. I'm going to follow that arrow back up here. So that comes in here for ending retained earnings. My ending retained earnings is equal to beginning of 0 plus net income minus my dividends of 20. So how much did I have in income this year in order to remove 20 in dividends and still have 190 left in ending retained earnings? Well, that amount for net income must have been 210. I must have had 210 in net income. And following my arrow up again, if my income is 210, and I know income is equal to revenues minus expenses, then revenues are 510. What did I deduct from those revenues to end up with 210? In net income, expenses must have been 300. And now I've solved for that last piece that we were requested. I'm done, Alan.